Thursday, July 20th, 2017, Monaco 64, home of alternative economics and contrarian views. So this is an early market update, and I just want to also talk a little bit about the stock market and how it just keeps melting up or going up, and also a little bit about politics in relation to the stock market. But first of all, yeah, it's around 9:45 a.m. London time. Spot gold is $12.38, down about $3.50. Silver $16.19, down about 8 cents. The Dow is up 30 points at 21,660. S&P up 2.5 points, so still going up. Stock market. Crude is at 47.28, so pretty much unchanged. The pound has dropped back below 130, cable. So it's at 129.94. We had gone up to like 131 earlier in the week. So the dollar's rebounding a little bit against the pound. The euro down very slightly, only 12 pips at 115.02. And the dollar is actually rallying today a little bit against the yen. We're at 112.35, up 39 cents. The low has been 111.76 for the dollar against the yen. And I think that's why gold is taking a little breather. Yesterday it did the same thing, rallied back up in the afternoon. What I see on the gold chart, since the low we've had on the 10th of July, so 10 days ago at 12.05, you know, we've rallied quite strongly. And what I see right now is just a consolidation before another move higher, in my opinion. You know, we went from 12.05 basically to 12.40, that's $35. So I'd expect the next move higher to be towards around 12.75. We might even get very close to the earlier highs of the year, around 12.95. And silver will follow gold. And I also expect the dollar to remain weak. As per the dollar index, we're seeing it's just also a consolidation of the move lower in the dollar. And we will see, in my opinion, the dollar resume its move lower. What about the stock market? Well, I've seen a lot of comments from, let's say, InfoWars, Alex Jones, saying that, you know, Trump is doing great for the U.S., for America. The stock market's moving higher. It's because of Trump. But I'm sorry, if it was another president, I'm sure InfoWars and Alex Jones would be saying this is a bubble. That's what they said when, you know, the stock market went from the lows in 2009. You know, don't forget, we got up to 20,000 under President Obama. And I'm not defending President Obama, and I'm not saying Trump hasn't done a good job in different aspects of his administration. I think he is. He's for real. And the reason I say that is because the mainstream media and the establishment is against him with this constant, you know, Russiagate story. They're just trying to like get rid of him through, you know, constant fake news. They can't just admit that the public was tired of the Clinton, Bush, Obama, you know, regime of corruption, lies, endless wars. So they have to blame it on someone else. But apart from that, though, we need to be objective on it. I don't think anything has changed financially. The statistics haven't become honest just because Trump is in power or, you know, is president. The Bureau of Labor Statistics, they still give out phony numbers, phony CPI numbers, phony GDP, phony unemployment numbers. So to say that just because the numbers now are looking better, or you know, the stock market is making all-time highs, it's because of Trump. I think it's not looking at the facts. And one of the reasons I say that is because, you know, there was an interesting article the other day, I think it was 3 days ago, in Zero Hedge, and it says there has been just one buyer of stocks since the financial crisis. And Zero Hedge mentions a study by Credit Suisse, a Swiss bank, saying, in fact, according to a chart from Credit Suisse, Fink is BlackRock's CEO. This has also got to do with Larry Fink making some comments in the last week or so that there's still a lot of cash in the sideline. Investors are still not investing. So this is in relation to Fink. And it says Fink may be correct, then he even knows, be more correct than he even knows, as Credit Suisse's strategist Andrew Garthwaite writes, and I quote, one of the major features of the U.S. equity market since the low in 2009 is that the U.S. corporate sector has bought 18% of market capitalization, while institutions have sold 7% of market cap. And it goes on to say, Zero Hedge says, what this means is that since the financial crisis, there has been only one buyer of stock, the companies themselves, who have engaged in the greatest debt-funded buyback spree in history. So there's a little chart here, you know, it shows the non-financial corporates, which is what he's talking about. Rest of the world is bought some of the market cap, and that's to do with the central banks, foreign central banks buying stock. You know, Switzerland owns like the FANG stocks, owns hundreds of billions of that. And but households and institutions are actually in negative. They actually sold market cap. And it goes on to ask, and it's not surprising, and I've spoken to this in the past, and I quote Zero Hedge, it says, why this rush by companies to buy back their own stock and in the process artificially boost their earnings per share? There's one very simple reason, as Reuters explained some time ago. Stock buybacks enrich the bosses even when business sags. And since bond investors are rushing over themselves to fund these buyback plans with yielding paper at a time when central banks have eliminated risk, who is to fault them? So basically what this means is that with the policy of zero interest rate, negative interest rates, QE, that's driven yields on, for example, government bonds, AAA corporate bonds. That's driven their yields down. So investors are searching for this yield. And what that means is that they want to lend money through the bond market, and they're willing, you know, to only get 2-3% from major corporations. And what the corporations do, you know, they sell their bonds, which means they will borrow the money, you know, very low. And what do they get in return? They get cash. And with that cash, they're buying back their stock and driving their earnings per share higher, because the earnings now, you know, are based on fewer shares. So the earnings look better, the stock price goes up, and that's what we've had. Basically, a central bank driven stock market bubble. And it's got nothing to do with Donald Trump. You know, a lot of the stuff he's been trying to, his programs have been blocked anyway. So to say that, you know, the stock market is going up because of Trump, I think is pretty misguided, and it's not really, it is fake news. Sorry, Alex Jones. I do like watching your program, but you have to admit it. Sometimes you have to criticize. You need to criticize even people that you think are sent for truth. So, and it goes on to say here as well that central banks, they've pumped almost $2 trillion into the equity market, or into the capital markets alone this year. You know, Bank of Japan is buying ETFs, Swiss National Bank, ECB now is buying corporate bonds. So it's making it even easier for the corporations to get very cheap access to cash. And what do they do with that? Well, they buy back their stocks, and it's just keeps going up and up and up and up. What will stop that? I don't know. It could some accident will happen. Bubbles are always there. Bubbles are always pricked eventually for some reason. So that's what I wanted to talk about. A little update on the markets and, looking at precious metals and the currency. What I see right now is just a consolidation of the trend we've seen in the last 10 days, which is a weaker dollar and stronger precious metals. So what we're seeing now is the market take a little rest, consolidating before the next move lower in the dollar, next move higher in precious metals. As for cryptocurrencies, yeah, they have rebounded off the lows. Bitcoin 2,300, we got down to 1,800. Ethereum, very volatile, still 206. But one thing I would warn people is that a lot of the movement in Bitcoin and Ethereum has been driven by these ICOs, initial coin offerings, which in my opinion, I don't trust. And the reason they drive Bitcoin and Ethereum is because you use Bitcoin and Ethereum to buy into these initial coin offerings. And, the people who issue these coins, they hype their ICOs, and then that makes people rush, to buy Bitcoin and Ethereum so they can buy into the ICOs. And then when the ICOs come out, they get out of their ICOs, and then they can also liquidate Bitcoin and Ethereum. So be careful out there. I think longer term, it's still okay, in my opinion, to have cryptocurrencies, but beware of all the games out there. So if you enjoyed this video, please like, share, subscribe if you haven't yet to my channel, and also watch me on steemit.com, steemit.com. And I'd like to thank all the people who've made donations in the last few weeks to the channel. There's some links below on the description if you'd like to donate. Thanks. Bye.